Today's the 29th of February 2020. I absolutely had to record a video today because I only get to say that date once every 4 years, of course. In today's video, I'm going to just take a quick look at some of the instruments that we've been speaking about recently, and I'm also going to take a look at the US dollar to Canadian dollar, which has been performing really beautifully this year, so it makes for an interesting discussion. Let's start with the S&P 500. Of course, the analysis in the S&P 500 has changed to indicate that this is an F category interaction that preceded this big move down. And most people would argue, well, that's clearly the case, because when you look at this really strong move must surely be what follows an F category interaction as price comes down towards the 20-week cycle trough, which is of course this nest of lows over here. So this is something that I've been discussing in previous videos over the past week or two, starting with my video last week in which I said that I felt that we were already entering into a D category interaction. Now, sometimes people get a little confused by the concept that I'm saying D category and then suddenly it's F category and so forth. So let me point out one thing first of all. A D category interaction is a short trade that you enter as price crosses below the 20-day FLD. An F category interaction is also a short trade that you enter as price crosses down below the FLD. If you enter into a trade thinking this is a D trade and it turns out to be an F trade, wow, that's actually good news, because it means that you're likely to get a bigger move than you expected previously. So in terms of the Hurst signal system and trading using this methodology with the FLD, if you think you're entering a D category trade, it turns out to be F category, that's actually a good thing. If you think you're entering an F category trade, but it turns out to be a D category trade, not such a good thing, but still not a problem, because you are trading in the right direction, and that's what's important. If it turns out to be a D category trade, whereas you were expecting an F category trade, then then you need to be a little quicker getting out to protect any profits you've made, or or you'll see them disappear as price crosses up above the FLD again. So that's the first thing that I wanted to say. The other thing is that I would encourage you to watch the market update video that I published to YouTube, the public video that I published earlier this week to YouTube, because I still think that it is very possible that the 20-week cycle trough did form over here on the 31st of January. Here is the nest of lows, and as you can see, that's a perfectly reasonable time for that to have occurred, for it to have occurred early. I'm not going to repeat all of those arguments because they're available for you in that video. But I wanted to speak about the implications of what it means, because it's something that we need to bear in mind. Okay, so with an F category interaction over here, we would next expect a G category interaction where price comes up to the FLD, and then an H as it comes down into the 20-week cycle trough. However, there have been 87 days since the previous 80-day cycle trough, which is now phased at the beginning of December 2019. The average length of an 80-day cycle is 68 days. So sitting and waiting for a G and then H category interaction when the 80-day cycle trough, or the next 20-week cycle trough, is now 19 days overdue, and on Monday it's going to be almost 90 days long, and so waiting for that might prove to be a mistake. So that's the first caution that I would like to make. If, on the other hand, the 20-week cycle trough did occur here, then, as I explained in the other video, this is a D category interaction, not an F category interaction. Not the end of the world, you don't need to panic about this, but it is possible still, in my opinion, that that's a D category interaction. It seems absurd with this really strong move down, but what's important is the implication of this. And this is the important message of this video. If the 20-week cycle trough did form here on the 31st of January, and then this is a D category interaction, then what has happened? What has happened is that this market has changed its tone and has turned bearish unexpectedly strongly and unexpectedly quickly. And that is something that is really worrying. And we've got to keep the context in mind. If I go to the overview, do I have an overview? No, let me open up an overview chart quickly. So if I go to the overview and let's zoom in there, then you know, of course, that we are expecting the market to come down into this big trough towards the middle of the year, the 18-month cycle trough, potentially a 54-month cycle trough. So that's quite a big trough that we are expecting the market to come down into. As you probably know, it is possible that the 54-month cycle trough should be phased to this trough over here. Where was that? End of 2018, December 2018. It's very possible, even likely, that the 54-month cycle trough should be positioned there, which means we're only coming down into an 18-month cycle trough. Nevertheless, it's a big magnitude cycle trough, and the market needed to move down into it. Now, if we focus just on this 18-month cycle, you would expect an M shape like that. It's been very bullish, but of course the market has to come down into the middle of the year. So what does the strong move down mean? Well, if we go back to the 3-month chart, it doesn't rule out the possibility that this is a D category interaction. It doesn't rule out that possibility, which means that next we are expecting an E category interaction. And an E category interaction gives us the opportunity for a long trade. However, there's a really big caution here, because if this is the situation, then that's an extraordinarily bearish D category interaction. It achieved its target and it far exceeded it, indicating that bearishness has come into this market, and it's bearishness that is expected to carry the market all the way down into the trough in the middle of the year. So it is still possible, in my opinion, that the 20-week cycle trough did form on the 31st of January. I might be wrong about that, of course, and it might be that the 20-week cycle trough forms now. But it's very important to bear in mind that possibility, because if the 20-week cycle trough did form at the end of January, then the market is worryingly bearish, if that's a term that I can use. If this is an F category interaction, then we will have our 20-week cycle trough forming now. Perhaps it even formed on Friday, the 20-week cycle trough, and then we're back into bullish mode as price rises out of that 20-week cycle trough. Not very bullish, I should remind you, because of course we're still expecting the markets to come down into a trough in the middle of the year, but we would be back into bullish mode. If, however, this is a D category interaction, and this is only a 40-day cycle trough that formed potentially on Friday, then again we're expecting price to cross up above the 20-day FLD, but there's so much bearishness that we don't expect it to go very far. So we really need to stay on our toes. You can see that the recommendation in Hurst signals is stating it could be a category G, but you should consider an early A category, okay? Because yes, it's possible that we're going to bounce out of that trough. Okay, so I hope that was useful. Let's now quickly take a look at some of the other instruments that I've spoken about recently. Euro US dollar, let's just quickly take a look at that. I did a video about the Euro US dollar, gosh, was it last week or earlier this week? And here you can see the strong rise out of that trough. I was speaking about that rise. So that's really interesting. Sentient Trader, of course, hasn't confirmed that as a trough, because it's not going to confirm a trough of 54-month cycles after only 1 week's worth or 10 days worth of price action. So it's being a little cautious, it's waiting for that. But of course you must focus on the nests of lows, focus on the circles and whiskers, don't focus on the diamonds. Don't wait for the diamonds to be positioned on your chart. The nests of lows are what are important. And let's also quickly speak about gold, because I recorded a video about gold. Let's see, where's that? Here we go. And so I did a video about gold really recently, and you can see price has come down now, pretty hard on the gold peaks. it seems likely that a peak of either 20-week or 18-month magnitude has formed. I'm still going in favor of this being a 20-week cycle peak, and interesting that in the peak analysis, price came down to the FLD, found the FLD and found a bit of resistance. If this is the 20-week cycle peak, we do expect it to cross below the 20-day FLD, which is a matter of interest. It will do, over the weekend, okay, almost by default. If price stays where it is at this level, then it will have by default crossed down below the FLD over the weekend, and we'd be projecting a move down to about here for that A category target. Bear in mind, however, that I think it's possible that the 54-month cycle peak still lies ahead of us, and therefore there is still a lot of bullishness in the gold price. But we need to watch it carefully, because if price breaks down heavily from here and doesn't give us a nice a bullish sequence here, then of course that would be an indication that the bigger magnitude trough has formed. And the last thing I'd like to look at in today's video is the US dollar against the Canadian dollar. And the reason I want to do this is because sometimes instruments just follow the FLD trading strategy to perfection, and I think it's worth talking about that, because the USCAD has really been a fantastic example of how this can work. So the 18-month cycle trough happened at the end of December of last year, and as you can see, we had an A category interaction. And if you take a look at the detail of that, and I think I'm too late to show this on the 6-week chart. Let me just see if it's still on the 6-week chart. I wanted to record this video a bit earlier. Almost, just about too late. If you so the A category interaction occurred off the left of this chart over here. Price then came down and touched the 10-day FLD. That's why we display the 10-day FLD on the 6-week view, because sometimes the 10-day FLD provides a good entry opportunity if you miss the A category. And there was a great entry afforded by price coming down and tapping the 10-day FLD. Price then came down and sort of touched or hugged the 20-day FLD at round about the time we were expecting the 20-day cycle trough. So the US dollar, Canadian dollar started behaving in a fairly textbook fashion. One of the problems with when price bounces out of a really big trough, such as the 18-month cycle trough, is if you put yourself in the mindset of looking at the chart at that time, it had been heading downwards fast, and the analysis is telling us to expect a bounce. But at the time, if you try and imagine being there at the time, it was hard to imagine that we were going to get a bounce. Everything looked disastrous for the United States dollar against the Canadian dollar. And so jumping into a trade as price came up to the FLD is a psychologically challenging thing to do, which is why I often miss the A category trades, because it can be a difficult trade to do. I'm not interested in taking difficult trades. As a result, I miss many trades, and we'll see another one that I missed in a moment. But when price came down and tapped the 10-day FLD, which it did just a few days later, that gave a great opportunity to get into it. Even then, if you were still cautious, you could have watched it. And the way in which it formed this triangular price action round about the 20-day FLD was the perfect opportunity, because price came down, found support at the level of the 20-day FLD. And again, we can see that better on the 6-week chart. Here it is, right at the left-hand edge of the chart. Price found support at the level of the 20-day FLD. When you see price finding support like that, and it's being held up by that 20-day FLD, that's a good opportunity to get into a long trade. And one of the ways in which you could have traded this was to have set a level just above the sort of highs, draw a trend line across the highs of those bars when they're finding support at the 20-day FLD. I don't believe in always trading using trend lines or VTLs. You need some other information to back it up. So price is finding support at the level of the FLD. Okay, that's a good time perhaps to draw a trend line and do that. Then of course you're getting into a C category interaction trade. Now C category interaction trades in work that we did to test to back test the strategy, if you like. Sort of automated back testing of the strategy. C category trades proved consistently to be more profitable than any of the other trades, including A category trades. And the reason for that was because many A category trades, not many, but some A category trades ended up not being A category trades. So the big trough hadn't formed yet, and therefore they ended up being losing trades. Whereas C category trades are made with more confidence because you've had a chance to observe price action for some time. And I know many people struggle with this because it requires patience. You don't jump into the trade when you get that A category trade because you're still uncertain. But then you watch it, and in this case we watched it for 2 weeks. I was trading the US dollar, Canadian dollar, although I was mostly doing intraday trading at that time. But I was watching it, and it was finding support at the 20-day FLD, and that was interesting. And then of course price went up. And the D category interaction was price dropping down and just finding support at the 20-day FLD. Now, usually, of course, you know that we expect the D category interaction to cross down below the FLD and to achieve its target. However, I hope you're really getting a feeling for this. When the markets are bullish, and was this a bullish market? Well, yes, look at the magnitude of that trough. It's an 18-month cycle trough, so it's a pretty bullish market. When you have a bullish market, the D category trade might not cross below the FLD. It might only come down and touch the FLD and continue upwards. Okay, so that was not unexpected, and potentially you could stay in this trade all the way up to the F category interaction. And now let's switch over to the 6-week view, because this market has continued to provide us with textbook interactions. Here was the F category trade, and it came down and it achieved its target. I'm pretty sure almost the next day, if not the next day, then sort of early in the next week. That was the target for the F category interaction. Then what happened? Price came up and tapped the FLD. Look at that. Wasn't that beautiful? That was on about the 18th, I think, of February, something like that. Came up and tapped the FLD. Next day, it dropped down again. Okay, then it came up and tapped it again. Then it dropped down again. And this day here was right about when we were expecting the 80-day cycle trough. Now, there's something I must tell you about the US dollar, Canadian dollar. That is that we use a shorter nominal model on this instrument. Over the years, it has worked very well for me, so we use it here. I cannot remember, to be honest, exactly what the nominal model is, but you can see that we have much shorter cycles. So it's a 43-day cycle and not a 68-day cycle. And you can see in the descriptions here, it speaks about a 12-day FLD and a 6-day FLD, and not a 20-day and 10-day. So those are the shorter cycles we're using. You could argue they're longer cycles. It depends, which way you shift them. But nevertheless, it came down here, and we were in a very interesting situation because, of course, from F category interaction, we expect price to come up to the FLD, G category interaction. Then it comes down to form the trough. How much further did it need to come down? The F category target had been achieved. Okay, over here. Gosh, I've drawn so much in this chart, you can hardly see anything. But the F category interaction had been achieved. The 80-day cycle trough was due. I was looking at this last week and thinking, should I make a video? And I thought, well, I'll give it a few days. But it was an interesting situation. So should we jump in immediately to an A category trade? Well, one thing that we could have done at this point was to draw a trend line across the top there and say, if price breaks up above that and above the FLD, then that's my A category interaction. Now that trend line, as a matter of interest, would have been a VTL. Okay, and it's worth thinking for a moment about which VTL that would have been, because it can inform your trading decisions. VTLs can be very useful in certain circumstances, not all the time. VTLs can be very unreliable because they're very closely based upon the analysis. So this was certainly a 20 5-day VTL, I think I'm correct in saying. No, sorry, this would have been a 10-day VTL because we joined the peaks of 2 consecutive cycles. So the 20-day trough was over here, something like that. So that is a peak of the 10-day cycle, okay, into the next 10-day cycle over here. There's the next 10-day cycle trough, and there's the next peak of the next 10-day cycle. So that is a 10-day VTL. Okay, now when price crosses up above the 10-day VTL, it tells us that a 20-day cycle trough has formed in the markets. At this point in the analysis, when we received confirmation that a 20-day cycle trough had formed in the markets, it inevitably had to be the 80-day cycle trough. And I'll let you think about that. If you don't understand it, then ask me about it in the comments and I'll try to explain it better. But at that point, when a 20-day cycle trough was confirmed, it indicated that the 80-day cycle trough had formed in the markets. So that was another great opportunity. If you were only watching the FLD, you might have missed it. And this was the trade that I missed, honestly, because at that point I'd got out of my trades and I was happy. I was stepping away for a moment, but price came up and we have another great A category interaction which achieved its target pretty much the next day, and it's continued upwards. So we have a really great sequence here. It makes for very good study. So I would encourage you to go and just have a look at this chart and go through it and understand how this strategy, how the characteristics of these trades remain consistent, but under different market conditions they can change. Well, I hope you found this video interesting and informative. Please leave me questions or any comments that you have in the comments below the video.